I am anticipating a significant upward move. As long as the three reasons mentioned today remain valid, I remain confident in this bullish setup. Hello, this is Killer Whale. I'm a seasoned Bitcoin trader who frequently publishes analysis on TradingView, focusing on Bitcoin's price trends and market dynamics. Today, I've prepared this video to share my current market outlook with you. Without further ado, let's dive right into the main content. Let me briefly share my Bitcoin outlook for this video. In short, I believe Bitcoin is positioned for a price increase. I'll explain this outlook through three key arguments, starting with the first one. I've applied the Bollinger Bands to Bitcoin's daily chart. Currently, the price is rebounding after touching the lower band. Support and resistance often occur at the upper and lower bands of the Bollinger Bands. In this case, the price first hit the upper band, followed by a touch of the lower band, typically a precursor to a rebound. Let's verify this with some historical examples. This is the chart from January 2024. At that time, the price followed a similar pattern, first hitting the upper band, then touching the lower band. Following this, the price rebounded sharply and eventually hit a new all-time high. Now, take a look at this chart from February 2023. Once again, the price touched the upper band, followed by the lower band, and we saw 4 consecutive green candles afterward, leading to a significant rally. This is the chart from February 2022. Despite a prevailing downtrend, we witnessed a technical bounce after the price touched the upper band and then dropped to the lower band. A significant rebound followed, even in the midst of bearish market conditions. Now, let's shift back to the current chart. After reviewing these historical examples, we can conclude that we're likely in a zone primed for a rebound. This strengthens the case for a bullish scenario. Next, let's take a look at the rising channel formed by 3 critical points. I find this channel quite interesting. When focusing on the half line, it has consistently provided clear support and resistance levels. Recently, we saw the price being rejected at this channel, which further reinforces its reliability. However, the price has currently broken below the channel. If it manages to rebound and re-enter, we could witness a significant upward movement. This pattern is commonly referred to as a trap, a frequent occurrence in technical analysis. This is the chart from December 2023. We had a rising channel based on 3 key points. After a sharp drop, the price broke below the channel but quickly recovered, forming a trap pattern before rising to the opposite end of the channel. Now, take a look at the chart from the March 2024. Once again, we see a rising channel formed by 3 key points. After 10 consecutive green candles, the price hit a peak and dropped. Despite breaking below the channel, the price quickly recovered, forming another trap pattern, and continued to rise, holding the middle line of the channel. Here's a chart from November 2023. This rising channel was formed by connecting the lower trend line and the peak. After a price drop, the price broke below the lower trend line, forcing many retail investors to exit their positions. However, the price soon rebounded and eventually broke out of the channel to the upside. This time, the trap pattern appeared twice, triggering multiple exits from the market. Let's return to the original chart. After reviewing these historical charts, it's evident that if the current price rebounds, there's a strong likelihood of a trap pattern forming. If this happens, a significant upward move is highly probable. However, keep in mind that this pattern will only be confirmed if the price re-enters the channel. The third reason involves the 3 market phases pattern. This pattern typically unfolds in 3 distinct stages: contraction, expansion, and profit-taking. First, contraction occurs, which stabilizes the price range and makes investors feel comfortable. Next, the expansion phase kicks in, causing volatility and confusion, often leading investors to get stopped out. Finally, the profit-taking phase occurs, sparking a FOMO, fear of missing out sentiment among investors as the price moves rapidly. This pattern is often leveraged by market manipulators to shake out retail investors before a larger price movement. Let's take a look at some past examples to see this in action. Here's the chart from January 2024. It showcases a textbook example of the three market phases. Contraction stabilized the price range. Expansion created volatility and confusion. And profit-taking resulted in a strong uptrend. Now, here's the chart from June 2023. Again, we see a classic case of the three market phases pattern. During the expansion phase, the price breached both the upper and lower bounds, forcing retail investors to stop out. This was followed by a strong directional trend. Let's return to the current chart. Looking at the current chart, we seem to be following a similar trajectory of the three market phases. If the price rebounds and the pattern confirms, we could expect a breakout from the channel, leading to new highs. Let's wrap up by summarizing today's key points. First reason, Bollinger Bands. The price touched the upper band, then the lower band. Historically, this has often led to a rebound, suggesting a potential recovery in the current chart. Second reason, the channel. This channel has shown strong reliability, with the half-line serving as a key support and resistance level. Though the price has broken below the channel, if it re-enters, we could expect a move toward the opposite end of the channel. Third reason, three market phases. We've already witnessed the contraction and expansion phases. The only phase remaining is profit-taking. If this pattern confirms, a large upward move can be expected. Now, for the final conclusion of today's video, I am anticipating a significant upward move. As long as the three reasons mentioned today remain valid, I remain confident in this bullish setup. This is a historically high probability scenario, and I personally plan to take a long position. If anything changes after the upload of this video, I'll update my analysis via my Telegram channel. Feel free to join to stay up to date with the latest insights. That's all for today's video. Thank you for watching, and if you found this content valuable, please consider subscribing.